$50 a week
I think
was my
mine
first
free.
internship.
I think I just worked.
They can't do that anymore.
I know. Well,
I think.
I'm a little older.
But no, I mean, I got $50 a week in housing.
So is that for a year?
So
Yeah, right. So 20,000. So it's almost 240. That's not a summer, right?
Yeah, it says the average salary is $16,356 a month. It's equivalent of nearly $200,000 a year. That's at Jane Street. We should note did not respond to a request for comment. Interns at the proprietary trading firm Jane Street. That's what they're going to be making the average of.
Okay, that's real money. In the meantime, just up the street from us, and I've been thinking about this because passing it actually yesterday, I saw some tourists who were taking pictures. They stopped because there was this massive building under construction on Park Avenue, and I'm like, that's JP Morgan's new headquarters.
So this is the 60-story skyscraper?
Yep.
How did it look now? How did it look now?
Well, there's a lot of work to be done.
Yeah.
It's got to be built.
They haven't put the yoga room in yet, and the indoor cycling rooms.
It's got meditation spaces.
They haven't put those in yet?
That'll be a no. Not yet, but they're coming.
They are.
They're going to have a lot of outdoor areas. They're going to have a state-of-the-art food hall. This is according to a statement that they put out today.
So the question is, I mean, it's all about luring talent and making it a great place to work. The question is, are people who are working there going to have the time to do those things? True question.
Yeah, but I mean, don't you think if it was like right there on, you could even just pop out for 20 minutes?
Maybe.
You could run by the food hall.
Do you spend a lot of time outside eating here?
No.
Exactly.
I eat at my desk almost every day. We're pretty busy here. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are falling, Treasury yields are rising, Elon Musk making lots of news. Let's head right over to the First Word breaking news desk for today's afternoon call. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. The Nasdaq is under pressure today. The Dow is currently up only just 10 points, was up 324. S&P's dropped 36, while the Nasdaq is lower by 240. The U.S. 10-year yield jumps to 2.83%. Gold is down 6. Oil is surging, and Bitcoin is sinking by 3.6%. Among the main 11 S&P sectors, energy and utilities led. Tech and telecom were under pressure. And leaders to the upside in the Dow, Nike and Caterpillar, while Salesforce fell 3.2% and led to the downside. After earnings, State Street fell 7.5%. Wells Fargo dropped 4.7%. Morgan Stanley and Goldman Sachs were a little changed. You mentioned Twitter. Twitter is now in the red after an opening gain of 5.8%. And wrapping things up, Twitter shareholder Saudi Prince Alwaleed rejected Musk's bid. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. Have a great long weekend to hear live breaking news over your Bloomberg. Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie's been talking about this group of stocks, certainly on the move. As we mentioned, this week it's all about big bank earnings, that first quarter reporting season underway. Today we heard from Citi, Goldman, Morgan Stanley, Wells Fargo. Yesterday it was JP Morgan. There's a few more to come, and we're seeing some different movement when it comes to those names.
Joining us now is Sri Natarajan, finance reporter for Bloomberg News. He's with us in the Bloomberg Interactive Brokers studios. Okay, Sri, let's say you're talking to a friend later today, or somebody listening right now, and they just haven't been able to take their eyes away from Twitter stock. They're looking at Tesla today. They're just
watching
totally,
the TED Talk.
They're watching the TED Talk. They totally ignored all the bank earnings that we got today and yesterday. How would you sum up the most recent quarter?
I mean, you go back and think what's been happening in the last 3 months. It just feels like there is a new cocktail of a variety of problems that have swarmed the world. And yet, as the numbers show today, the golden spell for the big banks continues to roll on. You were expecting results to normalize. You thought investment banking would sputter out. You thought that the turbulence and the turmoil and the tumult in the market would force them to slow down, but they still seem to be going all guns.
Wait a second. Yesterday, shares at JP Morgan closed at their lowest since January of 2021. Is that an outlier? Or is that, what's going on there?
So that's the interesting thing to look at here. There are really two elements to it. One, the immediate micro, what happened this quarter. And you see that these firms were able to post numbers, especially their Wall Street operations, their trading operations, that were close to the record set during the pandemic and clearly way above the levels the last quote-unquote normal year, 2019. So that's clearly growing great guns. But investors are paying attention to what's coming down the pike in the next couple of quarters, in the coming months, possibly next year. And the fears of slowing growth, the worries of the R word coming up again, is there a recession around the corner? If that were to happen, there is no scenario in which the bank stocks would be doing great when there is a recession, when there is no growth in the world. So that worry is obviously what shareholders seem to be worried about. But in terms of the banks making a boatload of money right now, that's going just fine.
Well, we've seen that in the KBW Bank Index. It's been under pressure for a while, and I've been watching that because, as rates have gone higher and the expectations, we all, when rates go up, net margin interest, we like that basic kind of expectation that banks are going to do better, but they haven't, and I've been wondering what that's telling us.
I mean, JP Morgan just this year, the stock is down about 20%. Goldman Sachs hit its all-time high in November. Since then, it's down about 25, 26%. Those are big numbers. When these companies are pumping out some pretty impressive record earnings, $12 billion a quarter, that's not the normal run rate for Goldman Sachs pre-pandemic, but they're still continuing to do that. It clearly shows that investors are happy with what they're getting, but they're very worried about what lies ahead.
We like the commentary that we get from bank executives when it comes to how they're feeling about the economy, how their customers are feeling about the economy. They have great data that shows in real time what their customers are buying, what credit cards they're using, how much they're spending. How would you characterize what we learned from the executives this quarter?
Yeah, if you listen to Jamie Dimon and Jane Fraser and all the other big bank executives, especially those banks that have big consumer operations, you would think that all their customers are Atlases out there. They're all very strong. Everything's going great. But if you snip away some of the rah-rah talk and look to read between the lines, it's clear that they are worried that all these problems, even before the Russian war in Ukraine, even before Russia's invasion, you had issues tied to supply chain logjams. You had worries about inflation. You had worried about how the central bank is going to react. Put all of that together, and it's a pretty explosive combination that a lot of them are worried about. Would they like a soft landing, and do they think that's still achievable? Yes. Is that guaranteed? No.
CEO David Solomon, right, saying it was a turbulent quarter dominated by the devastating invasion of Ukraine. We had a guest on who talked about what Jamie Dimon of JP Morgan said, that Jamie tends to often put a positive spin on things and is very optimistic, and that for him to be kind of as negative as he was, he felt like finally, like that was very true and was pretty significant. How did you see it?
I wouldn't say Jamie was pretty negative, but if you consider all the caveats that he does like to put a positive spin on everything, then yes, a Jamie Dimon coming out and saying, is a recession possible? Yes, absolutely, is something that people will sit up and pay attention to.
What's the story you focus on for the coming quarter when it comes to covering the banks?
One big thing that we're trying to figure out, especially when you think about the investment banking pipeline, when you think about companies raising money in the equity markets, borrowing money from the debt markets, do companies that have been spooked by rates just push out all their plans by a few months, realign and realize that, if you were in a 2, 3, 4% borrowing world, maybe you're in a 5, 6, 7% borrowing world, and you still have to go and get that done? Or do they still sit on the sidelines? Because that will impact how long this dry spell for investment bankers lasts. So that's absolutely a key point to look at. Trading is another one that we want to pay attention to. Banks often talk about good volatility and bad volatility, and all the volatility we've seen since the start of the pandemic has been really good volatility. Where does that go and how does that continue is something we want to pay close attention to. And of course, all the noise and signal from the big consumer banks on how their customers are holding up. Are they keeping up with their mortgages? Are they keeping up with their credit card payments? What changes in their behavior do they observe? Because that is something that will tell us a lot about the overall strength of this economy.
Yeah, really important metrics. There's so many moving pieces, but a lot that tells us about the outlook coming. Shri, thank you so much. Shri Natarajan, he's finance reporter at Bloomberg News, always a must-read here at Bloomberg, joining us in studio. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week, and we've been talking all week about the New York International Auto Show. It is back in New York City at the Javits Center after 2 years not happening because of the pandemic. And
Have you been before?
I think I have covered it.
It's cool.
You know,
It's fun. Yeah, it's a fun place to walk around.
I know you went this week.
Well, you know what? I thought I was going.
Oh, you
and
didn't go?
They were sort of like, they didn't want to pay to be at the auto show. So the company that I saw, so they were just kind of like off to the side, away from the Javits Center, but they were still around there.
Our Yelena Shaletiva is there, so we're going to check in with her. So sorry, Tim.
I know. I thought I was supposed to go.
All right, let's get to Charlie Pellet with a check on that trading day. Hey, Charlie.
Well, hello there, and let us begin with the automotive industry, specifically Elon Musk, Tesla, and yes, Twitter. Twitter shares tumbling now by 1.8%. Musk expressing doubt about whether he will succeed with his $43 billion offer to buy Twitter in his first public comments about the blockbuster deal. Speaking at a TED event in Vancouver today, the billionaire entrepreneur said, quote, "I am not sure I will actually be able to acquire it." Musk does say he has a plan B, but he's not offering more details. Again, we're keeping an eye on Twitter. We're following this fast-moving story. Twitter down now by 1.8%. If we're talking Twitter, cannot ignore Elon Musk and Tesla. Tesla shares tumbling now by 3.2%. Stocks lower. Treasury yields are climbing on speculation the Fed will boost rates aggressively to contend with decades-high inflation. We've got the 10-year yield now at 2.82%. S&P down 44, down 1%. The Dow down 46 now, a drop there of 0.1%. NASDAQ lower by 266, a decline there of just about 2%. Spot gold down 0.3%, 1972 the ounce. West Texas Intermediate crude up 2%, 106.29 a barrel. New York Fed President John Williams says speeding up the pace of interest rate increases to include hikes in increments of a 0.5 percentage point is a reasonable option for the Federal Reserve, given how low rates are now.
I think that's a reasonable option. I think that for us, because federal funds rate is very low, we do need to move policy back to more neutral levels later this through this year, and I think that's a very reasonable option.
And again, he made the comment in an interview on Bloomberg Television and Radio with our Michael McKee. Weekly gain for oil. Again, West Texas Intermediate crude up today by 1.8%. As for some of the oil stocks, for the most part higher. ExxonMobil, for example, up 1.4%. BP up 0.6%. Chevron up 0.2%. But on the minus side, we've got EOG Resources down 0.3. Pioneer Natural down by less than 0.1%. Again, recapping here, Twitter down 1.9%, 10-year yield 2.82%, and the S&P down by 1%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. As we mentioned, we've been talking all week about the New York International Auto Show being back after a 2-year absence because of the pandemic. And our weekend radio show and podcast, by the way, features several auto-related interviews, including the CEO of Lamborghini and then Michael Muzio over at Cox Automotive and Kelly Blue Book, who actually walked the show. You know who else is walking the show?
Yelena Shaletiva. She's senior U.S. economist for Bloomberg Economics. She joins us on the phone from the
you have your sneakers
Javits
on.
Convention Center here in New York City. Yelena, what is it like there after a 2-year hiatus? People wearing masks? What's going on?
Oh my God, it's such a blast. Finally the show is back to New York. Last year I was here with my family for COVID shots, but now there are cars here and plenty of new cars, including electric vehicles. People are walking around and it's like, it just feels so great, to be here.
I know, right? It's like getting back to quote unquote normal. Having said that, senior U.S. economist for Bloomberg Economics, why do you like to walk that show?
So I am looking to see what the prices are. I'm very interested in what kind of price ranges are presented, and they are expensive. Okay, and I think we will continue to see prices being pretty high and supported by limited supply and very high demand for motor vehicles. I think we are pretty far away from really significant deceleration in price growth for motor vehicles. We saw a decline in the latest CPI report on used motor vehicles, but I don't think we're anywhere near a substantial series of declines in terms of car prices. I think we will continue to see that being supported. That gives an opportunity for auto companies to invest in new vehicles, in electric vehicles, and probably make them profitable going forward. So they're expensive, but companies making a lot of money, and they can invest in new technologies.
If anyone listening missed our interview with Keith Naughton earlier about Ford's F-150 Lightning, do check it out. It's the cover of this week's Bloomberg Business Week. What about component shortages, Yelena, supply chain challenges, inflationary pressures driving prices higher? What's the conversation happening there? What are you seeing on the ground?
So what we see in the data is really there was a nascent kind of recovery in supply, in assembly lines, and some nascent recovery in inventories, but it was interrupted. It was interrupted by Omicron. It was interrupted by the war in Ukraine, because not only because commodity prices are rising in general, but for example, Ukraine is a significant supplier of neon gas that is used in production of semiconductors. So we may see continued supply shortages on the back of the recent developments, and unfortunately, that means that supply will continue to remain, quite small relative to where the demand is. I think demand is somewhere in 16 to 17 million units annualized, but we may only be able to supply 13 to 15 million. So that means prices will probably continue to be elevated.
Hey, you're over there, the backdrop of, we got another read on retail sales for the month of March. I'm looking at one right through by Romali Smith that says U.S. consumers hang in there despite bigger bite from inflation. Retail sales up 0.5% in March after firmer February results. You're at the car show, you're thinking about the consumer. How would you describe the health of the consumer? And just got about 30 seconds.
Consumer remains healthy. Yes, they had to reallocate some funds towards higher gasoline and prices, but I think overall consumer is still in a good health. Wealth effect from last year, increase in housing prices and equities is there that will help consumers to shield some of the, from fiscal restraints and so on. So I think we're in a pretty good shape. And I did see the Lightning. It's amazing. So that's one of my favorite vehicles.
I was going to ask you if you could pick a car to come home with, what would it be? Is it the Lightning? Just quickly.
Yes, absolutely. I'm an F-150 person.
What do you like the frunk? The trunk in the front?
Yes. It's oh my God, it's amazing. There is a trunk in the front. I was going to sit in there.
I love it. Be good for your family. Hey, listen, take care and have a good weekend. Our Yelena Shaletjeva, senior U.S. economist at Bloomberg Economics.
Well, let's go from the Javits Center here in New York City down to Washington, D.C., where our studio is with Nancy Lyons. Hey, Nance.
Thanks, Tim. Frank James is being held without bond after appearing in court today on federal terrorism charges. He's the man accused of opening fire on a crowded subway train this week in Brooklyn. Mia Eisner-Greinberg is his court-appointed attorney.
Mr. James is entitled to a fair trial, and we will ensure that he receives one.
Mia Eisner-Greinberg says it was her client who contacted police and told them where he was when he saw his face on television. Tuesday's subway shooting may be deterring folks from using the system. An MTA official says ridership went down about 5% after the shooting, but the system hopes an arrest in the case will calm anxious riders concerned for their safety. The Boston Marathon will be taking place Monday, and officials say security there is tight. Lieutenant Colonel Scott Warmington is with the Massachusetts State Police.
I can assure you that the state police and our law enforcement partners remain vigilant, and we are well prepared to respond to any situation. Furthermore, our marathon security operation is dynamic and scalable and can be quickly adapted as necessary.
Lieutenant Colonel Warmington says spectators will need to go through checkpoints and have their bags checked. Florida Governor Ron DeSantis has signed into law a new state law banning abortions after 15 weeks.
We are here today to protect life.
Governor DeSantis signed the bill at an evangelical church. Florida joins a growing conservative push to restrict access to the procedure ahead of a U.S. Supreme Court decision that could roll back abortion rights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
The story that just keeps on giving. Thank you, Elon Musk. This is our most read story on the Bloomberg right now.
When I woke up this morning and saw this, I was like...
With the deal offer, you mean?
Yeah. I was just like, are you serious? Again?
Like, really?
This? Him again?
Did you actually file something with the
He
SEC?
did.
I know.
He did. Okay, it's an unsolicited $43 billion bid. It's for Twitter. You know what we're talking about if you've been paying any attention today. It is, though, setting up a showdown between two of Wall Street's biggest advisory shops, which could result in lucrative payouts for both if the biggest hostile takeover in years is successful. Who are we talking about here?
Rock'em Sock'em Robots. We're talking about Morgan Stanley. They are advising Musk, according to that filing today, while Twitter has enlisted the help of Goldman Sachs as it considers how to respond to Musk's hostile bid. According to people familiar with the matter, the pair often tussle for the top billing. We always talk about the league tables when it comes to M&A rankings. You can find it on the Bloomberg terminal, but the two often really kind of compete for that top spot, with Goldman currently in the number one spot, according to our data here at Bloomberg.
Okay, so we got to note, Carol, that a big chunk of any fees for the banks hinge on the deal actually panning out. That's certainly uncertain. Musk did say earlier today he's, quote, not sure if he'll actually be able to acquire Twitter. He did tell Chris Anderson at TED in Vancouver earlier today that he has a plan B if Twitter's board rejects his offer. He did not offer details as to what that plan B could be.
This is what I love about technology, the business world, the Wall Street world, because friends can be enemies, they're frenemies, really, because both of them, they would be sitting opposite them in any kind of negotiations for a kind of deal opposite one another. Morgan Stanley and Goldman, and each, though, have a relationship with Musk, stretches back more than a decade. Both New York investment banks underwrote Tesla's 2010 IPO. Goldman got the coveted lead left role, while Morgan Stanley was listed second on the prospectus.
Okay, well, speaking of friends and enemies, just how the tables have turned since last week when we were talking about him potentially actually taking a seat on the board. Now, hostile takeover.
Passive, it was a passive stake,
right.
Which Kathy Wood, right off the top, told us, passive, maybe not. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story out of New Jersey. Governor Murphy says New Jersey pot sales can begin on April 21st. New Jersey adults can buy marijuana at medical dispensaries. New Jersey is the first in the New York metro area to allow legal marijuana. So again, pot sales beginning April 21st in New Jersey, according to Governor Murphy. It is a down day on Wall Street, 13 minutes to go ahead of the closing bell. Stocks are falling, Treasury yields climbing. On speculation, the Fed will boost rates aggressively to contend with decades-high inflation. The 10-year yield right now, 2.82%. S&P's down 45, a drop there of 1%. Looking like we will close lower here. The Dow down 41 points right now, a drop of 0.1%. NASDAQ lower now by 1.9%. Spot gold is down 0.3%, 1972 the ounce, while crude is rallying 1.8%, 106.12 for a barrel of West Texas Intermediate crude. Twitter shares do remain lower now, down by 1.8%. Elon Musk is expressing doubt about whether he will succeed with his $43 billion offer to buy Twitter in his first public comments about the blockbuster deal. Again, Twitter trading lower now by 1.8%. Recapping, 10-year yield 2.82%, S&P down 45, a drop there of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
One of the most important decisions a politician can make is selecting a competent deputy who's ready to step in as soon as the need arises. The people of New York could have expected Kathy Hochul to understand this, since she served as lieutenant governor for years before stepping in to replace Andrew Cuomo in 2021. But apparently not. It emerged this week that Hochul's running mate in the upcoming gubernatorial election, Brian Benjamin, has been indicted on campaign finance violations. After pleading not guilty, Benjamin resigned from his role as lieutenant governor. If ballot rules prevent Hochul from changing running mates before the primary election, as seems likely, she should throw her weight behind the most qualified candidate available, even if it requires a write-in campaign. Supporting someone who's above reproach is the best way for her to win back the confidence of New York's voters. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in the trading day, getting ready to wrap up this holiday-shortened trading week, of course, ahead of the Easter holiday. Hey, and back with us is David Dietz.
David Dietz is managing principal and senior portfolio strategist at PPAC Private Wealth Management. They've got $11.1 billion in assets under management. David joining us on the phone from Summit, New Jersey. David, good to have you back with us. Help us make sense, not just of today's trade, but what we've been seeing lately, because outsized moves from technology and some big moves intraday as well.
Yeah, absolutely, Tim. So I think the key highlight today was the rapid rise in bond yields on that 10-year Treasury. Got all the way up about 13 basis points to 2.82. You know, we haven't seen a 10-year Treasury that high since 2018. And, of course, what really took it hard were the tech stocks. The mantra there is that they have the longer-dated earnings and, therefore, are more sensitive to higher interest rates, raising the discounting mechanism to present value those earnings. And so the NASDAQ was down sharply, the Dow and S&P not so much. Why did the interest rates go up? That's what you want to, peel down the onion a little bit. I thought it was the higher than expected import prices announced today kind of took away a little bit of the hope that we had seen peak inflation. Of course, we had Fed speak with John Williams talking about, again, get ready for potentially a 50 basis point hike on May 4th. So those things were not friendly to yields, and stocks fell pretty much accordingly.
All right. So then, we keep talking, David, about where's the top for yields, right? When it comes to the fixed income and the treasury trade, where's the bottom for stocks? Do you have any kind of clear thoughts on that in terms of, is it, and I mean, are you comfortable calling a top or bottom for either of those?
Well, there are no bells rung, of course, at the bottom or the top. So certainly I think traders can take heart with the fact that in the CPI numbers that we got earlier in the week, the headline number was a disaster. But when you strip out that food and energy, and I know we all have to drive and eat, but when you strip that away, the core rate was much lower than expected, which suggests perhaps that there's some mitigation of this price spiral here. And so I think that was a positive. The other thing I liked is that, some of the financials, their results really have been, frankly, quite mixed, adding in loan loss reserves due to Russian losses and potential losses from inflation. But, Citigroup was up today. Morgan Stanley was up today. Goldman wasn't down as much as expected, which suggests that some of these concerns have been priced in, and maybe we're starting to form a bottom in some of these sectors.
Retail sales rising 0.5 percentage point in March, despite a bigger bite from inflation. As our Molly Smith writes, a glimmer of optimism that Americans aren't ready to pull back on spending en masse in the face of decades-high inflation. Is that also more optimism for you?
Kind of. Obviously, it was good that it wasn't negative, but when you compare the increase in retail sales versus inflation for the month, was it really net of inflation positive? And of course, a lot of the spending was due to the requirement just to spend more on gasoline to keep your car running. So, it was okay. I think what I'm still taking a lot of comfort in is that we have very strong employment metrics. All the people who want jobs have them. We got, of course, weekly unemployment claims today. They're still under 200,000, which is very, very good. So I think as long as consumers have jobs and wages continue to go up, we're going to see pretty strong support out of the consumer.
There's lots of things, David. You know this. We do this here at Bloomberg. There's just all these different market indicators that we try to focus on, whether it's what's going on with the transportation index, the Dow Transports, watching those bank moves. They've been under a lot of pressure despite rates ticking higher, which kind of goes against maybe some of the thinking that we typically have about those big banks. Watching home builders, they're under pressure again, too, as we see mortgage rates climb. What are the key market indicators that you really keep a watch on?
Well, for me, it's really inflation, because with higher inflation, that does reduce, as you're just talking about, consumer spending power. It's going to have a downward effect on corporate margins, and of course, ultimately, it's going to raise interest rates more and cause the Fed to be more hawkish. So any signs that we're getting past peak inflation is going to be good. I have some optimism there because I think a lot of it is due to supply side snafus. We know that pandemic is waning. That should ultimately help things like the ports and so forth. Hopefully China ends some of their lockdown as they get past the pandemic. And of course,
although President Xi coming out and saying that, we're gonna be tough. We know that there's pain and there's going to be an economic impact, but saying that we need to be strict when it comes to the quarantines.
I think he's doing the right things, and my optimism comes that 6 months from now, things could be better. We saw it get better here. Why wouldn't it get better there? And of course, the other key thing to watch is the Russia-Ukraine situation. We saw some ugly headlines today where the N-word came out, nuclear, in response to the idea that Finland and Sweden might drift closer to NATO or join them. That didn't help sentiment, but if we can get past all that, I think that will free up some of those commodities and energy resources, and also help bring down supply-side snafus for inflation.
Apart from commodities, David, doesn't it seem like the market in general, at least from an equities perspective, has looked past the conflict?
Well, certainly if we saw, a olive branch extended, I think energy prices would be down 10% before you finish your coffee on Monday morning.
Apart from commodities.
apart from commodities. Yeah. We're still seeing, we heard from some of the largest banks in the United States about having to set aside money for either losses due to Russia or anticipated losses due to Russia. So I don't know whether that's fully played out there. I do think things would improve, and certainly sentiment would improve if that was resolved.
All right, we got to run. Hey, David, thank you so much. Have a good weekend. David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management, more than $11 billion in assets under management, on the phone from Summit, New Jersey. Folks, we've just got about 3 minutes left in today's trading session. We're hovering near our lows when it comes to those major equity averages. We are on track for about a 3% decline in the NASDAQ 100 this week and down about 2% for the S&P 500. And we definitely have seen a spike up in yields today, certainly more and heightened concerns once again about inflation and a more aggressive central bank move, certainly by the U.S. Federal Reserve. All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs back in the saddle. We're counting you down to the closing bell here on this Thursday afternoon. Here to help take us beyond the bell, our global simulcast with Carol Masser and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. Carol, a shortened holiday week here, and we're ending on a down note.
Yeah, pretty painful. Down about 2% for the S&P, it looks like right now, and more for the NASDAQ 100. I've been watching Bed Bath & Beyond, guys. I'm just kind of a little obsessed. It's down 9 days in a row, down 23%, still up 20% for the year overall, but we've seen a lot of selling in this name as of late.
Lately, we've seen Bitcoin move in tandem, or at least in correlation to tech stocks. Today, certainly no exception, though underperforming the major equity indices, down 3.5% for Bitcoin so far today.
Well, and Tim, you talked about some of the tech stocks. I think it was notable that you sort of had tech underperformance, at least today, relative to the S&P 500. But yesterday was actually the first day in a while where that trend had reversed a little bit, given the big tech underperformance, Caroline, that we've seen as of late.
I mean, the fund flows that you're seeing into the QQQ at the moment, you can be taken off guard from 1 month to the next. At the moment, April looking like another withdrawal of money. We saw actually money pour in the month of March, but it's been a down, down, down story for most of the year.
Yeah, a big question here really about investor conviction right now. Obviously, for the longer-term investors, this is just a, sort of another blip in sort of your long-term investment strategy. But that those that are looking for strategic opportunities here, you wonder whether they're willing to actually jump into this given the volatility and the uncertainty.
Yeah, those money flows are interesting, and we have, as Caroline mentioned, seen money both going into equity funds as well as fixed income.
All right, we are getting the closing bells here in New York once again. Remember, Friday here in the U.S. is a market holiday, so this is the final trading day of the week here for equities as well as the bond market. The Dow Jones Industrial Average down about 110 points roughly, down about 0.3% here on the day. It's going to finish the week down about 0.7%. The S&P down 1% on the day and down about 2% on the week. The NASDAQ Composite down about 2% here on the day, and on a weekly basis, we're looking at roughly about almost a 3% decline. We'll call it basically 3.1%. And let's take a look quickly here at the Russell 2000. Believe it or not, on a weekly basis, this is the bright spot. It actually closed down about 1% here on the day, but it managed to cling to a modest gain here over the last 4 days of about 0.5%.
All right, and as you said, Romaine, down for the day overall, those major equity averages. Digging a little bit deeper into the S&P 500, you can see that negative tone. 332 names in the S&P 500 lower today, Taylor, 169 higher and 3 unchanged.
You know, Carol, it's interesting when we talk about the internals. It certainly looks a little bit weak, particularly on days like today. For the radio audiences we do every day, it is the sector best performers and the sector worst performers. And Carol, what stands out to me is there's a lot of red even within the sector best performers, right? But nonetheless, it's interesting. We heard from Quincy Crosby over at LPL Financial saying that even the sector winners, it feels defensive. And you see that, right? It's durables, it's transportation, it's food and beverage, it's utilities. Those are sort of the main sector winners on the day. We go down to the bottom of the screen and, well, it is all technology, right, Carol? It's semiconductors, it's autos, it's technology, it's media, it's software services. Those sectors, you're off anywhere from 2 to about 3.5% on the day.
You know, and I love it, Taylor, that you were looking at those financials, which are down for the day overall. We've heard from all of the big banks. Check it out. You know, Citi, Goldman, Wells, Morgan Stanley all reporting. But I find what's interesting is, in terms of gainers, U.S. Bancorp Corp, really one of the standouts. It's up more than 4% in today's session. That company saw a first quarter EPS beat. Their first quarter provision for credit losses came in smaller than forecast. And this is a name that was also top in the NASDAQ 100. Also top in the NASDAQ 100 was Marriott International. We've all been watching the travel industry, the hospitality industry, and this name was up almost 3%. We had Joseph Terranova over at Virtus Investment Partners. He said there's pent-up travel demand. We've been talking about that. He recommended buying Marriott International. This stock's up about 10% in the past 3 days and up about 21% since early March. One more name, Nike, a standout, top in the S&P 500, up about 4.7%. JP Morgan sat down with some of the company leaders. They put out a note. They said Nike is positive on the company's Chinese business. We know that's really important. And they said positive despite all of those COVID restrictions. Stock's still down, though, Tim, about 20% so far this year.
Okay, you got the gainers. I got the decliners. You know I was going to start with this.
We fought
one.
over Twitter. Can we just say
well,
that?
It was going to be a gainer for much of the day. That's what we had to talk about. But it certainly seemed like late in the day it was heading to the downside. And that's what we're seeing at finish. Twitter finishing the day down by 1.7%. But quite the range today. Highs of 5.8%, lows of more than 2.4%. This, of course, is after we learned that Elon Musk has made a $43 billion offer for Twitter.
And we should point out, Tim,
$54.20. Yeah, go ahead.
And we should point out, Tim, that during the pre-market session, I mean, this stock actually did get up to that $54 threshold. I think just below it, around $53.99. So it seemed that the knee-jerk reaction was that there was some sense here that this was a serious offer, and investors did think it was going to go through. But when you got a close here at $45 lower than where it closed yesterday, and of course well below the offer price that Elon is making here, you sort of wonder here, do investors think that anything is going to come out of this?
I wonder what plan B is. Elon Musk referred to that.
He did refer to that.
But he didn't give any details.
And now he's picking Twitter fights with Prince Alaouid on Twitter. And
But it's
somebody
still,
who's important
but it's still
to
above,
actually approve the deal.
It's still above, right, when Elon mentioned his passive investment, right? So, like, I guess if it goes below that, then we have to really start to get worried, maybe?
Yeah, well, not materially higher. And then a lot of people, of course, Carol, will then look to where this stock was a couple of years ago when it was, had a $69 trillion dollar market valuation, and a lot of concerns here now about how do you unlock value for this company. I think this was a debate long before Elon sort of entered the picture. But now you got a new CEO, and now you got a board that has to sort of look at Elon's offer and decide, is it in the best interest of shareholders?
All right, Tesla also finished the day lower. Speaking of Elon Musk, I guess the concerns are that, he's going to have to sell some shares perhaps, maybe could do a leverage buyout, borrow against it. But still, this price, about 1/6 of his net worth is what it would cost. So even though he's the richest person in the world, more than $40 billion, it's still a lot of money. Peloton shares down 4.6%. We talked about it earlier. The company lowering the price of its hardware, raising the price of its subscription to try to change the mix of revenue.
Yeah. It's painful. If you bought the bike when it was expensive.
Can he just buy Peloton?
What's that?
Can he buy Peloton?
Easily. He could easily buy Peloton.
Just buy everything. Why not?
But is that the town hall of discourse? No, it's just where we all go to get a feel-good factor and work out and get some good pheromones going around our body. But meanwhile, I'm looking at what I also had a feel-good factor on the commodities front. Let's go cross-asset for a moment, Romain. I'm looking at natural gas on the up almost 5%. We've got a cold snap apparently coming off this glorious weather in New York on the East Coast, but I'm looking at oil pushing higher, actually about 8% higher on the week if you're looking at WTI crude. This is, we still potentially hear reports that the EU could be galvanizing itself to slowly but surely imply some sort of restrictions, some sort of sanctions on Russian oil. So we see oil push higher, Brent crude up 2.3%, but actually metals getting a bit of a today, steel up higher. This even as though we see a dollar strength story. So commodities managed to rally even as the Bloomberg dollar index was up 0.5%. That is a story of the trajectory of yields that I'll leave to Taylor finally back in the chair again this week. But on the overall, we're seeing the euro off by 0.5%. Madame Lagarde, the ECB, once again, not giving any on the record hint of really as and when they'll normalize, saying it'll be slow, it'll be flexible. But according to people familiar, we could see the first rate hike in the third quarter coming from the Eurozone, as of course they have to target the skyrocketing price pressure that they see over there, particularly when it comes to oil and gas. We see a Swiss franc, no bid for a haven there, off by 0.9%. And in Europe, well, it's been a global bond sell-off. Overall, yields pushing higher in Italy up 14 basis points, Greece up 15 basis points, Germany up 12, Taylor.
You guys always make fun of me when I say the bond people are the smartest guys in the room. Today they were smart.
And girls.
They went home.
Thank you,
all
Caroline.
the girls went home at 2 p.m. They decided to close the market early. It's a holiday weekend. It's the weird equity people that decided to keep the market open until 4 p.m. Nonetheless, we did get a close, Carol, of course, just 2 hours ago or so. But it was a yield higher kind of day. A little bit of a reversal from what we've seen. 2-year yields, of course, lower on the week. But at least here for the day, you are ending with yields higher, bond price lower.
All right, is it too soon to talk about next week and what's coming?
Yes. No.
Does it involve Elon Musk at all?
Well, you know it's going to
420
involve Elon Musk. He's going to keep us busy. We'll see what happens. We get housing starts. We're going to have more earnings. I mean, what is it kind of top of mind for you guys?
We do have Tesla earnings, Carol, so it is going to
Okay. There you go.
So
we get Tesla earnings. Obviously, the earnings themselves mean nothing. It'll just all, of course, be about Musk and sort of what he says about, of course, some of his ventures. I do think the Netflix earnings next week are going to be pretty interesting, too. You remember sort of the last earnings season and a lot of the concerns right now about the company's pricing power and the slowdown here in the growth.
JB Hunt, of course, another big one that we're looking at. Romaine, I know that you mentioned that is a big special that we're going to be focusing on our triple take as you continue to look at some of the inflationary and the pricing pressures underway, indeed, for some of these shipping companies.
What is fair value for Twitter?
What's your discount rate, Romaine?
As long as it has 420 in it, that's fair value.
You did catch that, right?
Am I the mature one today for a change?
No, never.
No.
Wait, define
Did you say the word pheromones on air? Shall I get
Twice?
I'm very tired.
We all need some pheromones right now.
Taylor, thanks for coming back today, by the way, for the one-day work week.
Yeah, Taylor.
Sure.
You know me.
All right.
She's the smart person in the room.
The Taylor rule. We got to run. All right, guys, have a good weekend, a safe weekend. We will be back, same time, same place. That's going to do it, though, for Beyond the Bell. We will be back on Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's also interesting.
You won't be back on Monday.
I will be back on Monday, so
a well-deserved day off, Carol. I approved it.
I'm looking forward to it. Thank you very
You're
much.
welcome.
I didn't know it when I put in a request.
Yeah.
Tim signs off.
Yeah, don't worry. You were going to say something. I'm sorry.
No, don't be. I was looking at what's coming up next week. We do get the Fed Beige Book. It sounds kind of boring, but what's interesting about this is we've talked about what we get from those regional Fed banks, their anecdotes about what's going on from businesses and the economy, and this is what the Fed will use at that next meeting.
You're looking at macro. I'm talking about micro. P&G, Alcoa, Snap, Philip Morris, American Airlines, American Express, Schlumberger, Netflix, J&J, Hasbro, Lockheed Martin, just to name a few.
Just a few earnings, man. It's going to kick off. These are important, what these CEOs have to say. Pricing power, inflation, supply chain problems, the outlook. Let's see how many commit to putting estimates out there.
All right, let's get to Washington, D.C. now for a check of the latest world and national news. Joining us is Nancy Lyons. Hey, Nance.
Thanks, Tim. The FBI is piecing together a federal case against the man charged in this week's Brooklyn subway attack. Frank James made his first court appearance today and was ordered held without bail. Mia Eisner-Greinberg is representing James and says there should be no rush to judgment.
Mr. James saw his photograph on the news. He called Crime Stoppers to help. He told them where he was.
Maya Eisner-Greinberg says Frank James is entitled to a fair trial. Russia is towing the flagship of its Black Sea fleet back to port for inspection after an explosion on board. Ukraine says its forces fired an anti-ship missile at the Moskva. The Pentagon's John Kirby says it is clear something happened on board.
We do believe that there was a significant explosion on this cruiser, the Moskva, of the Slava class of cruisers in the Russian Navy.
Kirby says at least some of the crew members were able to evacuate. One of former President Trump's closest policy advisors is testifying before the House January 6th committee.
Stephen Miller was a senior advisor for policy in the Trump White House. He helped to shape the former president's decisions on a number of issues, including immigration. Sources tell the Associated Press Miller is appearing before the January 6th committee today after multiple attempts to resist cooperating. Just last month, Miller filed a lawsuit to try to quash a subpoena for his phone records. But the January 6th committee has referred 4 other former Trump officials to the Justice Department for criminal contempt for refusing subpoenas. In New York, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take.
Thank you so much, Nancy Lyons. She is in our 99.1 newsroom in Washington, D.C. So we've been talking about a lot of stuff, and I know we've been focusing a lot on Twitter and that that formal bid that Elon Musk made for Twitter today. But we do want to just bring you a story that is dealing with the Russian war in Ukraine. Russia threatening to deploy nuclear weapons in and around the Baltic Sea region if Finland and Sweden join the North Atlantic, Treaty Organization, NATO, as tensions fueled by President Putin's invasion of Ukraine spread.
All right, Dmitry Medvedev, deputy chief of Russia's Security Council and former president, says, quote, in this case, there can be no talk of non-nuclear status for the Baltic. That suggests that Russia may deploy Iskander missiles, hypersonic weapons, and nuclear-armed ships in the region. He said this in a Telegram post on Thursday.
Yeah, it's a little scary, to say the least.
Yeah.
Medvedev's comments are among the most detailed threats Russia has issued over the prospect that its northwestern neighbors might join the alliance after decades of staying out. But both Finland and Sweden this week saying they're stepping up consideration of the issue in the wake of Russia's invasion of Ukraine. This was part of the Bloomberg quiz this week, this question. I don't know if you went there yet.
Yeah, I did. I got that one right, but not too many others. The Lithuanian president, though, dismissed the threats as, quote, empty, accusing Russia of already placing tactical nuclear weapons in the Kaliningrad exclave in the Baltic. The president saying, quote, I don't know if one can deploy something anew that's already been deployed.
I mean, this is really tricky. And these nations, you know, in terms of alliances and helping out their security in the region and being aligned with NATO, it's been important, right? It's something Ukraine has been pushing for in these other nations, but obviously Russia feels threatened by the increased strengthening of those alliances, and that's certainly at play here.
I do want to note that Kremlin spokesperson Dmitry Peskov declining to comment on the possibility that nuclear weapons might be deployed in the Baltic region, but did say that Putin has already ordered the military to prepare plans for boosting defenses along Russia's western frontiers.
Also noting the price of the membership, how they see the different nations and their membership, they do see that differently.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turned out to be a losing week for the U.S. stock market this week. The S&P 500 index was down 2.4%. The Dow this week down 0.4%. NASDAQ this week lower by 3.9%. Red on the screen on this Thursday ahead of a long holiday weekend for a lot of people. Stocks fell as Treasury yields climbed on speculation the Fed will boost rates aggressively to contend with decades-high inflation. S&P down 54, a drop of 1.2%. The Dow down 113, down 0.3. NASDAQ today lower by 292, a decline there of 2.1%. The 10-year yield at 2.82%. Spot gold down $5 the ounce, down 0.3% to 1972. Crude another move higher, ending the week at 106.35 a barrel. West Texas Intermediate crude up today by 2%. Elon Musk and Twitter, we had a lot of developments there today. Musk expressing doubt over whether he will succeed with his $43 billion offer to buy Twitter. In his first public comments about the blockbuster deal, Twitter down today by 1.68%. Again, recapping, stocks lower, losing week, S&P down 54, a drop of 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And Charlie, speaking of Twitter, Elon Musk just tweeting 6 minutes ago, and he puts out there taking Twitter private at $54.20 a share should be up to shareholders, not the board. It's a poll, so you can vote yes or no, and we're seeing a lot of activity on that. All right, we've talked a little bit about, and certainly Nancy Lyons has, covering the war in Ukraine. And we know that there's obviously the military aspect of it. There's politics. There's so much at play here. But we've talked a lot, too, about the humanitarian impact and the devastation when it comes to that, Tim, continuing to grow.
Dr. Len Rubenstein is director of the program on human rights, health, and conflict at the Johns Hopkins Bloomberg School of Public Health. Dr. Rubenstein joins us on the phone from Baltimore. The Johns Hopkins Bloomberg School of Public Health, it is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Rubenstein, how are you?
Good. Thanks for having me.
Well, it's really great to have you. Although, you know, the topic that we are talking about is certainly distressing, I think. It certainly is to me. I do want to get an understanding from you about how we should think about conflict zones. And, you know, when I hear terms like rules of engagement or war crimes, I think to myself, well, you know, isn't it a crime just to do what happens in war anyway? But we are seeing reports of Russia bombing and destroying hospitals, and I'm wondering how we should think about that in the context of human rights, health, and conflict.
The prohibition on attacking hospitals and civilians is very old. The protection of hospitals and patients and health workers goes back up more than 150 years. And the reason people talk about war crimes in that context is that those kinds of attacks have been designated as war crimes for a very, very long time, because it's fundamental that even though killing is permitted in war, it's restricted to combatants. You're not supposed to attack non-combatants, whether they're patients in a hospital or civilians living in an apartment house.
Well, and I'm listening to you talk, and I think anybody who's got a clear heart knows that this is not the thing to do, and yet it happens, and we see it over and over again, certainly in our time. What do you think, though, is the grit out there among geopolitical leaders, global leaders, to do something about this, especially if you look at the current case and do something when it comes to pushback or consequences for Russian President Vladimir Putin and his team?
You're certainly right that this is not a new problem. In wars going back decades and decades, hospitals have been attacked. There were 600 attacks in Syria. Russia attacked hospitals and health workers in Chechnya, and they're not the only ones. The Saudis attacked hospitals in Yemen, and on and on and on. What we hope for now is that this is really the first time the world has really paid the kind of attention it's paying to the enormous number, more than 100 attacks on hospitals in Ukraine, And for once, and it really is for once, there are chances for accountability. The impunity for these attacks has lasted as long as the attacks have taken place. So the question now is, will we bring an end to that?
Well, Dr. Rubenstein, how do we bring an end to that? Because it doesn't seems like the fighting is continuing despite more than 5 rounds of sanctions by the UK, the EU, the United States, and a lot of international pressure short of actually the international community going to war with Russia.
It's like the criminal law. People have to know that there are consequences for their actions. And if criminal law is not enforced, people will continue to disobey. And of course, there will be people who commit crimes regardless of what the law is. But if it's enforced, there's at least a chance, an opportunity that people will think twice, and combatants will think twice before engaging in these kinds of attacks. And it's the absence of those consequences, or even the realistic prospect of those consequences, that has allowed these attacks to go on and on and on, destroying societies, destroying health systems, leading to deaths both in the moment during the attack and way, way afterwards as health systems collapse, kids go unvaccinated, chronic diseases go untreated, women can't get safe childbirth. So we need to say there has to be a turning point where, and Ukraine, because it's getting so much attention, provides a chance to have that kind of accountability.
Dr. Rubenstein, we only have about 30 seconds left here. Are you disappointed with the UN, though, in not being stronger when it comes to issues like this?
The UN Security Council has a structural problem because the 5 permanent members have a veto. Until that problem is solved, these powerful states will continue to obstruct enforcement of human rights. So it's a problem of the whole structure of the UN. We're finally having that discussion.
Yeah, and I think it's an important one. We've certainly been having it, I know in my home, and I know certainly in our newsroom. Thank you so much for your time. Dr. Len Rubenstein, he is director of the Program on Human Rights, Health, and Conflict at Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Rubenstein joining us on the phone from Baltimore. Coming up, this is certainly a big problem of our time, climate change. We're going to get to the author of a new book. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massler along with Tim Stanovec. Looking forward to the next conversation we're going to have over our final two blocks here on this Thursday. It's looking at climate change, but a very different take, and something, though, that could bring about a crisis, a financial crisis akin to what we saw in 2008.
Looking forward to our conversation with Eugene Linden, journalist and author of the new book, Fire and Flood, A People's History of Climate Change from 1979 to the Present.
All right, let's get back, though, to your top business stories. It was a busy Thursday ahead of the holiday weekend. Hey, Charlie Pellet.
Lots going on today. Carol Massler with the Dow, the S&P, NASDAQ all declining for the week. A losing week. S&P this week hit hard, down 2.4%. The Dow this week, by comparison, down 0.4%. NASDAQ, though, Techland is where the real damage was done this week. NASDAQ was down by 3.9%. Here's what happened today. Stocks fell. Treasury yields climbed on speculation the Fed will be boosting rates aggressively to contend with decades-high inflation. 10-year yield 2.82%. The S&P down 54, a drop of 1.2%. The Dow down 113, down 0.3. NASDAQ down 292, a drop of 2.1%. Spot gold down $5 the ounce to $19.72. A jump today for crude, ending the week at about $106.50 a barrel, up today by 2.2%. So a down day for the Dow, the S&P, and NASDAQ. What was driving trading? David Dietz is senior portfolio strategist at PPAC Private Wealth Management, and he was our guest right here on Bloomberg Business Week.
I think the key highlight today was the rapid rise in bond yields on that 10-year Treasury. Got all the way up about 13 basis points to 2.82. You know, we haven't seen a 10-year Treasury that high since 2018. And, of course, what really took it hard were the tech stocks. The mantra there is that they have the longer-dated earnings and therefore are more sensitive to higher interest rates.
And again, today we have the NASDAQ 100 index full of tech names down 2.3%. Elon Musk, speaking of tech names, expressing doubt about whether he will succeed with his $43 billion offer to buy Twitter in his first public comments about the blockbuster deal. Speaking at a TED event in Vancouver, he said he's not sure that he will actually be able to acquire it. He also, though, did say he has a plan B if Twitter rejects his offer without offering more details. Twitter shares down today by 1.7%. Tesla was down 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massler along with Tim Stanovec. A lot going on this week, and we definitely have seen it playing out in the market. Certainly, first and foremost today is the Twitter and Tesla story, and something we'll continue to certainly monitor. Another thing that we certainly keep a watch on is what's going on when it comes to climate change, ESG assets. Yesterday, I talked about all the money, a Bloomberg Intelligence number that's out there that says ESG may surpass 41 trillion assets this year. Investors are increasingly asking for it, but when it comes to climate change and all the different parties involved, it's complicated.
It's really complicated. Fortunately for us, we have Eugene Linden, journalist and author of the new book, Fire and Flood, A People's History of Climate Change from 1979 to the Present. Eugene joins us on the phone from Irvington, New York. Eugene, it's really good to have you with us. We've got quite a bit of time with you this afternoon, so we're looking forward to our conversation. I just want to start, though, with big picture and really in your interpretation, how you think we're getting the conversation around climate change wrong in this day and age.
Well, we're not doing anything. There's a hell of a lot of talk about it. 26 Congress of parties, and we're on the 6th assessment from the UN, and emissions are 60% higher than they were in 1990 when they were already a problem. And between 1990 and now, 2.3 billion people have been added to the population. The average emissions per person is about more than 4 tons, so that's another 10 billion tons that we have to take out. And we were already forcing the climate into a warmer state way back in 1990. So we have just a much bigger rock to roll up a much steeper hill with a much shorter timeline.
Why have we been so bad about this?
I think there's a number of reasons. One, fundamental to the way we do business is that the momentum of business as usual is just enormous. And we have a kind of blind spot in our economy in that we have a very hard time representing the long-term threats in a business that is focused very much on the short term, and essentially leaves us blind to these long-term threats like climate change. My best example of that, I think, is the insurance industry, which recognized the threat at the reinsurance level, the part of the industry that insures catastrophic risk very early on. But at the retail level, the momentum of business as usual was to keep writing policies even for people moving into harm's way.
Eugene, I have to say, when we were talking about this on our early morning call this morning about you coming on, I remember early on that's what started to get everybody's attention about the cost of climate change and from an insurance industry aspect. And I feel like that was what initially made us all kind of sit up and take notice, and then it kind of just went away.
Oh, yeah. Way back in 1993, I wrote an article for Time expecting that the insurance industry would be a white knight in the climate story because they live and die by pricing risk appropriately. Mm-hmm. And there were a couple of things I didn't realize. They turned out to be a very timid white knight, by the way. But what I didn't realize then was the incredible momentum, again, to keep writing policies. And then secondly, their genius at offloading and spreading risk. And then also, most insurers can have policies on an annual renewal basis. So if something goes wrong, they can get out unless regulators stop them, which was the case temporarily in California. But the net effect of this was, well, they did get out, actually. In Florida, after Hurricane Andrew, a bunch of insurers stopped writing wind policies. And the state stepped in and basically socialized the risk. And that happened in California as well. And so where I expected to see a signal in the market, in the economy, that would cause people to make an orderly move away from the zones that are really in jeopardy from climate change, that didn't happen. In fact, the reverse happened. The underpricing of risk led millions to move into areas that are most at risk of climate change, not just the fire zones in the west, but the flood zones on the coast.
Yeah, and it's
Go ahead, Carol.
Well, we've seen, Business Week has done some reporting about areas where people are very vulnerable. It tends to be often lower income areas, people that are really susceptible to flooding, and how municipalities across the country have started buying up those properties just to kind of stop it.
We're speaking to Eugene Linden, journalist and author of the new book, Fire and Flood, A People's History of Climate Change from 1979 to the Present. Eugene, stick with us because we're going to get some serious time with you in just a few minutes after we do some news, check the markets, and more. Carol, I'm looking forward to the conversation in terms of talking more about how the conversation shifted and the big business interests that he writes about who have been dominating the conversation, at least in Washington.
Well, and he also writes about the story about what's going on right now has startling parallels to the 2008 financial crisis. So if nothing else gets your attention on this Thursday, that certainly should. So we're going to get back to him in just a moment. Right now, we want to get back to Nancy Lyons. She's in D.C. with World and National News. Hey, Nance.
Thanks, Carol. President Biden continues touring the country to promote his economic agenda. As Bloomberg's Irv Chapman reports, today the president went to North Carolina and urged Congress to pass his proposal to invest in technological research and development.
The president watched a demonstration of robotics at a state university in Greensboro and cited production of electric trucks and school buses at nearby factories.
Americans are back to work. Our economy's gone from being on the mend to being on the move. Now, I know that we're still facing challenges of high prices, inflation. When we build more in America, ultimately it helps lower everyday prices for families. We're going to export billions of dollars worth of product for the rest of the world.
The president noted long-time disinvestment in local manufacturing, a policy he said needs to be reversed for the sake of economic strength and national security. In Washington, Irv Chapman, Bloomberg Radio.
Recreational sales of marijuana will begin in New Jersey April 21st. Governor Phil Murphy made the announcement this afternoon in a tweet. The action makes the Garden State the first area in the New York City area to offer pot to customers 21 and older. The drug does remain banned on the federal level. Frank James, the man who allegedly opened fire on a crowded subway train in Brooklyn, will remain in federal custody after briefly appearing in federal court today. Mia Eisner-Greinberg is his court-appointed attorney.
We are all still learning about what happened on that train, and we caution against a rush to judgment.
Mia Eisner-Greinberg says James is entitled to a fair trial. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. We're going to get back to Eugene Linden, journalist and author. We are talking about his book, Fire and Flood, A People's History of Climate Change from 1979 to the Present. In the meantime, we pulled up the top green menu on the Bloomberg terminal, and popping up is a story about the climate promises make Paris, the goal made in Paris by many nations, possible if policies follow. So national...
That's key, right? If policies follow.
If ifs and buts.
Yeah.
We're candy nuts. We'd all have fun at Christmas. This is by our Eric Rosted.
National climate goals made through mid-November, if met quickly, leave open the possibility that global warming could halt before it reaches 2 degrees centigrade. That's according to a new analysis that combines the pledges with the latest scientific research. 2 degrees above the pre-industrial average is the upper limit that the Paris Agreement identified to avoid the most catastrophic impacts from climate change.
All right, so this is a quote from the authors who were writing in the journal Nature. They say, our results provide a reason to be optimistic. Warming could be limited to 2 degrees or just below if the pledges on the table are implemented in full and on time. Global climate stability is riding on that if.
Wow, okay. So the new analysis tracks the impact of 154 new or updated national commitments made through mid-November. That's the end of the UN climate talks in Glasgow. The findings hinge on immediate and substantial pollution reductions to implement a country's ambitions. 76 long-term national goals cover 75% of global greenhouse gas emissions.
So this is really tricky. You know, making pledges does not, as our Eric Roston writes, making pledges does not reduce emissions, and without new policies to enact them, the world could be on track for warming of 2.6 degrees by the end of the century compared with the pre-industrial average. That's well into a climate danger zone that people around the world are already seeing glimmerings of, with only a 1.2 degree of rise so far. What's interesting is it's not just about dealing with what's currently out there, but it's reducing new emissions, the creation of new emissions.
That's a big part of it.
Yeah, it's huge. It's huge. And that's the thing. And this is why when you and I have somebody on, they're like, well, in 10 years, in 20 years, we're going to do this. And it's like, well, in 10 or 20 years, it may not matter anymore.
In the long run, we'll all be dead.
Oh, my God. I'm really sorry to be so dark. We are sorry to be so dark. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down week. It's on to the weekend. Long holiday weekend for a lot of people. Stocks fell as Treasury yields climbed on speculation that the Fed will boost rates aggressively to contend with decades-high inflation. This week, the S&P was down 2.4%. This week, NASDAQ was down 3.9%. Today, the S&P dropped 54 points, falling 1.2%. The Dow down 113, down 0.3. NASDAQ today down 292, a drop there of 2.1%. 10-year yield 2.82%. Spot gold at $19.72 the ounce, down 0.3%. West Texas Intermediate crude today up by 2.1%, 106.45 a barrel on West Texas Intermediate crude. Twitter closed lower as billionaire Elon Musk expressed doubt about whether he will be succeeding with his offer to buy the social media giant, while citing a plan B if the bid is not accepted. Today we had Twitter shares tumbling by 1.7%. Briefly, California, which aims to have a carbon-free power grid within 25 years, got a short glimpse of that possibility earlier this month. State officials say the state's main grid ran on more than 97% renewable energy at 3:39 p.m. on Sunday, April 3rd, breaking a previous record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, there's a new book out. It's entitled Fire and Flood, A People's History of Climate Change from 1979 to the Present. It sounds the alarm about the looming climate-caused financial crisis. We are talking with the author, Eugene Linden. He's an award-winning journalist and writer covering science, nature, and the environment. He's still with us on the phone from Irvington, New York. Eugene, I'm going to let Tim ask this question because we both were thinking about this during the break.
Eugene, I had this professor in college. He taught science, technology, and society, and he was big into climate. And he said that people just shouldn't live in California. I'm a Californian. I'm from California. My parents are there. Is he right? I mean, should people not live in the West? Should people not live in these areas that each year get consumed by fire?
What's going to happen in California is that climate change has basically put it in a rain shadow. It's now in the midst of a drought that is the worst in 1,000 years, and it isn't going away anytime soon. Basically, the rainstorms have been shifted poleward, further north, and leaving California and actually parts of Oregon dry, and that's not going to change. And so the fire regime is going to continue, and eventually that is going to get priced by the insurance industry. Even now, a lot of insurers, AIG pulled out of California, for instance, and a lot of homeowners can only get the bare bones backstop from the FAIR program, which is the California insurance backstop insurance program. What that means is, if you think about it, is that most people have a mortgage. You can't get a mortgage without fire insurance. And if you can't get fire insurance or you can't afford the premiums, you're not going to be buying a home. Some people aren't going to be able to sell it. And already there's been stories about how climate migrants are leaving the fire zones, moving to perceived safer places like New England.
Well, how do you explain, though, the rise in housing prices in California and continuing to be out of reach for so many people and people still staying there? I mean, it's not being priced in yet.
No, it isn't being priced in, and it's not being priced in Florida. The hottest city in the country is Miami. And the Rhodium Group with ProPublica and the Times did a study of every county in the United States for like 5 different risks from climate change, including sea level rise and windstorms and fires and everything else. And they aggregated those risks, and they said these counties they named a bunch of counties that might be unlivable in 20 to 40 years. One of those counties was Miami-Dade, and that's one of the hottest real estate markets in the country. So, people, I hear anecdotal stories of people where they bought a condo and their prices doubled in the last year. Palm Beach County is another of those counties. The county that is home to Hilton Head is another, and there are also counties in Texas and Arizona and in California. So, that will change at some point, and the problem is that because of the underpricing of these risks for so long, there are a lot of people there, and I argue that it sets the stage for a replay of 2008, where you have home buyers who either can't sell their home or can't get a mortgage to buy it, and the values drop. And then, of course, you get a banking crisis, as what we had in 2008. I had a front row seat for that because I was chief investment strategist for a hedge fund back when as it was unfolding, and I can see something similar unfolding. The difference being is that 2008 was a one-off, and, basically once we cleared up the bad debts and everything else, we could restart the economy. In a climate-related financial crisis, it's going to get worse year after year after year because the climate crisis will get worse. And that's what we face. And, I think, but it's not just a financial crisis that's down the road. You mentioned the predicted temperature rise for even if we abide by the Paris for 2100, haven't been seen on the planet since before the ice ages, some 3 million years ago. There was plenty of life back then, but no humans. So for those who argue, God, we can't deal with climate change because it'll lower our standard of living, I disagree with that, by the way. I would argue there's a much more serious lowering of standard of living coming if we don't deal with climate change.
I had a line in the lead to you initially, and I think I dropped it, but I would say how everybody is arguing, when it comes to thinking much more about the environments, that the existence of our world depends on it. And, that's where we're going. And I don't think people understand the severity of it. I joke about the metaverse, that's where we're all going to have to live because we're not going to be able to go outside because it's going to either be so darn hot. And it's funny, but it's not funny. So we've only got a couple minutes. We can't solve climate change right here and now. But what would you say to our audience, a smart audience who are plowing money into ESG assets and so on and so forth, thinking they're doing the right thing, making their contributions, companies who are playing out and talking with Tim and me constantly about sustainability initiatives and how they're taking the right steps? What would you say?
Well, I do think that the business and finance community has had a sea change in the last couple of years, recognizing not that regulation for climate change is a threat to profits, but that climate change itself is a threat to business. That's heartening, and the money flowing into these things is heartening as well. And there are solutions out there, to take carbon out of the atmosphere. You can make concrete by making synthetic limestone, by combining carbon dioxide with calcium. You can make steel without coal. That's 8% of emissions, 2 billion tons a year, by running electrical current through iron oxide and other metals. And so there are these solutions that can be deployed, and the money flowing in will help deploy them. We have to do that. The thing that has to happen, I think, is that we need a universal agreement to lower emissions, universal meaning every nation on Earth, because we can't have exceptions like China and India and other developing nations and put the entire burden on the Western nations because they cannot do it alone. So it is possible. We are in for some degree of climate change. We're already experiencing it, and it's already costing the economy trillions.
All right, we're going to leave it there. Listen, thank you so much. Really some thoughtful things from Eugene Linden, journalist, writer, his new book, Fire and Flood, A People's History of Climate Change from 1979 to the Present.
Let's get to Washington, D.C. with Joe Matthew for what's coming up with Sound On.
Well, I'll tell you guys, we're going into a holiday weekend and a lot of concerns about what's going to happen in Ukraine. This is the moment, according to Russia. They're really bearing down here. And we'll be joined, as you were kind enough to mention earlier, by Thomas Pickering, the former ambassador to the UN and to Russia, about the way forward.
All right, great guest. Looking forward to that. Joe Matthew of Sound On. Obviously, that war in Ukraine now kicking off its 8th week. We've got a weekend show. Check it out.
Lots
tonight
of cars.
at 8 p.m. Also over the weekend. Lots of cars, right?
Yeah, it's fun.
Have a safe weekend, buddy.
Thanks, you too.
All right, everybody. You too. Take care. This is Bloomberg.
from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.